Let's take a look at some information and charts on Synthetix, revenue coin. So Synthetix, in my view, is a lending and borrowing protocol. Ultimately, they call it a derivatives liquidity protocol. It's basically a conglomerate of several ideas put together, similar in some ways to single collateral DAI early on, in that in order to mint the synths, you need SNX. So there's both a built-in use case there and an issue with single collateral anything for a loan, because if the collateral declines in value substantially, you need to add more SNX as collateral, or you get liquidated. As more and more people get liquidated, there tends to be a waterfall cascading effect, and you get what you get on price, which is what I'll point out when I get to the technicals. But fundamentally, there's an issue with the whole system. Now, in a bull market, everything's great, right? Everything's awesome. It's just like using ETH for ICOs. In a bull market, it sucks up supply and ETH price increases. In a bull market, SNX gets sucked up into these synths, and then the SNX price typically goes up. But in a bear market, when things get slippery to the downside, you often see heavy liquidations. So they have these synths, like I said, they have staking, they have governance. We'll look at all that stuff. The synths, that's hard to say, that they do have are a mixture of Forex and crypto. This list, it has been reduced significantly in recent weeks. Maybe it's for regulatory reasons. Maybe governance has led the way on that. But at one point in time, they had equities and whatever else. Those got delisted from UniSwap several months ago at this point. But this is the list we have now, down to almost nothing here, which is probably partially why the token hasn't done so great recently. There's just less reasons to use it. And as far as network stats, really for something like this, I mainly care most about who's using it, how many people are using it, what are the volumes like, typical DEX type stats. They also have layer 2 stuff going on here, and we can look at longs versus shorts. Even though I thought shorts were disabled, apparently on one of the exchanges you can actually access inverse synths on like Quenta or something, because if we look at layer 1, you can see a bunch of shorts there, and it looks like there's a 350 million short on ETH currently active. But stakers are rising or had been rising, currently flat. Total issued synths are flat, no changes there. SNX supply is flat. And then if we look at trading volumes over the past month, are reaching multi-week highs, but it's down significantly from earlier in the year, and they never really were sustained. They just spike really high at certain points. What you'd much rather see is continuous uptick in volume or some sustained volume rather than people using it one day and then not using it the next. A number of trades also quietly picking up here after just declining since the beginning of the year. So it looks like in general, somebody's using this slowly, but not a ton. They're using it more than they had been. This is their staking UI. It's basically atrocious. They've been working on reskinning this, but it's all here and easy to connect to should you want to do so. And we can look at the staking rewards on stakingrewards.com. Currently the adjusted reward, this is either an error or it's actually after inflation, your reward is basically negative 22%. So it's not worth staking SNX. You can always lend it at 5%. Total participation in staking currently 49%. And you can always go much deeper as to who's staking what and when and why and what the rewards actually are. Is there protocol revenue attached, that sort of thing. That's important to know, but I'm not going to talk about it in this video. Here are the proposals on the governance side of things. Maybe for SNX more so than other coins, similar to Maker, similar to maybe ENS that just got released. Governance is starting to become a bigger deal because the stakes are getting higher. But if the stakes are low and nobody's voting and nobody cares, then it's just governance, right? This is never going to move price on any given day. The biggest problem with governance in crypto is that the whales dictate the entire thing. So it's not one person, one vote. It's one coin, one vote. So if you're a VC or a stakeholder, your vote is weighted much more than the average person, which is fine, but your average person wishes are probably never going to get approved for governance if they go against whatever the VC or the majority stakeholder wants to do. And that's no different than business, but it's definitely not democracy or democracy adjacent or anything like that. Looking at TVL on DeFi Llama, TVL across the board at all-time highs here. And if we find Synthetix on the list, it is at 2.2 billion according to DeFi Llama, and according to the bank, it's at 1.7, and over time that's just sort of flattened out. So it's hard to know what to trust here as far as, do I trust the trading numbers? Do I trust the volume numbers? Do I trust TVL? Does any of this actually matter for price? It should matter if more people are using synths, because SNX is required to make those synths, and that soaks up supply. So based on the TVL calculations, it looks like there's no additional depositors or users on a relative basis over the past several months. And if we look at contracts, interactions, users, calls, whatever, all that's just sort of flat. Nothing's really changed over the past several weeks there. So if you're bullish, you obviously want to see those numbers pick up a bit. If you look at Synthetix compared to all the other DEXs, if you consider it a DEX, I mean, it's sort of multifaceted, but it's definitely never going to take over most of this market share. I just like to look at it relative to everything else. And then here it's not even listed on a weekly basis, and on a monthly basis, you can barely see it there in the pink or whatever color that is. So compared to everything else, it's not really the best buy, especially when we look at market cap to annualized revenue, or PE ratio equivalent. It currently has basically a 200x PE ratio, which means the market cap is 200 times greater than annual revenue. Compare that to something like SushiSwap, which has a stronger rev share component, more volume. For people considering this metric, this is a much better buy than Synthetix, as is Aave, Comp, Uni, Balancer. I mean, this thing's such an outlier. It just looks like a giant avoid based on these metrics. If you look at the on-chain stats for the token, transaction counts in the line here have been declining since January. Certainly not bullish for any token. And average transaction values hit all-time highs basically recently. I don't really know why, but it looks like there are very few entities moving just a ton of SNX on-chain. Active addresses in the fill here, also basically at multi-month lows. Now, if this thing truly gets bullish, you're probably going to see active addresses pick up, because again, you need SNX to mint the synths. So if you're minting the synths, you're moving them on chain and you're ticking this active address component to the upside. NVT, inverse metric of economic utility relative to market cap, much like MVRV or PE ratio, just continues to increase. So you're seeing less and less on-chain activity relative to market cap, and that is most certainly not bullish. Now, if we look at MVRV relative to market cap, for most coins, this tops out at a 2x relative to local highs or all-time highs in price. For DeFi, there has been really no signal thus far. We either need more data, or it's just not a metric worth using on DeFi. And you can see MVRV in the fill here just continues to decline. And I don't even know what that means, if it means anything at all. But in the future, if price does increase significantly on SNX, let's say to 20 or so, I'll be looking at MVRV to see, is MVRV back to its 2+ multiple? Is there some sort of signal we can see there that makes sense? So far, there's really nothing worth noting other than MVRV is just flat here at 1, which means on-chain activity and market cap are basically at parity. Looking at Synthetix Google Trends worldwide past year plus here, there was a crescendo in Google Trends, which matched local high or all-time high for SNX there, and has just declined. I mean, this is just every other metric I've looked at, active addresses, trading, users. It all shows you different flavors of the same metric. If you're bullish, you expect this to start curling up. You expect Google Trends to start picking up, more people talking about it, whether or not it's some regulatory governmental body going after SNX or something, right? That's going to all show up here. So it's just been quieter and quieter since the beginning of the year. Flipping gears to technicals, this is the 1-year MA multiplier. And how this works is anything below the green here, below the green line, is typically a buy zone. And you have to make sure you have data on backtesting that makes sense. You don't have a lot of data for SNX here, but arguably it does make sense. You get your buy zones here, your sell zones in the red. This is the multiplier. This is actually one of the cleaner looking backtested 365 MA multiplier charts, because it's just ping-ponging between these zones. Currently, we're below the green, so we're technically in a buy zone using this metric. We have been sort of in this area since May. So if this does play out as it has 3 other times throughout 2019, 2020, and 2021, the top is potentially around 67. So if I was trading this alone and knew nothing about SNX, knew nothing about crypto, I would be expecting in a vacuum at 67 level soonish. I just don't know. The tough part here is I expect Q1 to be bearish across the board. I do not expect Q1 to be bullish for DeFi like it was in 2021. And if that's the case, SNX is sort of running out of time to start moving. That isn't to say it can't 6x from here in the next couple of weeks because we've seen crazier before, but it definitely needs to start curling up sooner rather than later. At the same time, I don't hate it as a buy based on that metric. If you look at the 50 and the 200 EMA, VPVR, volume, RSI, it's currently below the 200, sort of at the key volume area at around 10. So if you're bullish, what you want to see is no lower lows from now on till the end of the year. And you want to see price curling up above the 200 with a bullish 5200 cross. At that point in time, that is probably your safest entry for long because then you have bullish continuation expectations. Currently, it's definitely more neutral to bearish than bullish. So you have a higher risk reward here because this could easily just keep slipping lower, 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 right? Until trend metrics tell you it's decent to do something. It's just a tough sell to buy it here. Against BTC, it's had this continuous Reaper thing, sickle. Yeah, sickle, that's it. This we see this a lot. I don't know why in crypto, but where you get a tightening of a falling wedge, not quite triangular, but a curvature to it. Anyway, volume's declining. This thing looks like it just wants to puke back to this zone. So I don't hate bids down there, and this very likely will form some sort of bull div. So the best case scenario, honestly, is if this thing just sells off rapidly back to 10K sats or lower, and then on the USD pair, it actually recaptures that 200 and starts to curl up. Because then at that point, I think towards the end of the year, it can get rotated into, like you typically see with altcoins, to have some crazy strong move before the first week in January. And against ETH, things look pretty dire. Not a ton of volume support until much, much, much lower. It's getting smacked down by the 50 every time it tries to break above that. Very far away from the 200-day moving average. And price-wise, it's at a multi-year low almost at this point. And fundamentally, there's no reason to hold it over ETH anyway, but based on technicals, I would want to be buying it way, way down here, which is at 0.07. So that is a significant decline. But if I had bids on this anywhere, that's where it would be. But basically all the way back to the 2019 levels. And we've seen crazier. We've seen crazier things than like this V bottom potentially in altcoins. I'm not expecting it. I'm not going to trade it as such. But if it were to happen, I wouldn't say, wow, that's extraordinary. That just tends to happen when people rotate out of the majors and into something else towards the end of the year. Lastly, I'll just mention ETH-BTC fund and DeFi portfolio. I trade for TechMe Capital and Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance, allocation, all the vaults I'm in here on YearnComp and Aave, as well as the trades and the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.